Welcome to Volatility 411 for Equity Armor Investments. I am Joe Tigay, watching the market recover off of this morning's sell-off on the open. Powell was out before the market, threw cold water on the market, threw cold water on the idea of negative interest rates, said that there are increased risks to the economy if the recession is longer than people expect. Obviously, that's out of a lot of people's hands, considering the recession is due to a virus, which we really can't control that much. So we're watching all this as it plays out now. This is another reminder that the stock market is not the economy. The stock market has recovered significantly off of the lows we saw in late March, and now we're almost back up to all-time highs. However, the economy is on worse footing in some metrics since World War II, as Powell said earlier today. The unemployment is going to stay high for a long period of time. It might take a few years before this recovery actually starts to play out. Now, that said, the market has given these companies the benefit of the doubt. They're not expecting any earnings this quarter or next quarter. We're really looking out a year from now, and as long as they're projecting earnings to be in place then, they're okay with that. And also, they're looking at the low interest rates, which are allowing these companies to refinance, do business at better levels. Of course, that goes right into their bottom line, and they're allowing these asset prices to appreciate just because they expect companies to do better with low interest rates. Historically, that's been true. We'll see how it all plays out. Of course, at some point, if the economy doesn't turn over a year from now, I think these companies will be in significant risk. So I've been saying for a long time, these low interest rates are going to help these companies out, give them a tailwind to go higher. However, these low interest rates are also a greater risk to the economy, so we're seeing a higher volatility expectations because of that. In the VIX, of course, we were well below 30 yesterday, on the low 26, and then we reversed, and of course the VIX was up a touchdown all the way to 33 on that huge down move. So the market really repricing risk yesterday. Also today in the pit, I'm seeing July 30-25 1x2 put spread. Customer doing it 15,000 times for 38 cents, buying the 30, selling 2 of the 25. Certainly looking for VIX to stay in this elevated level above 20, at least throughout the summer. For Equity Armor Investments, I'm Joe Tigay.